Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. And today we're going to be talking about estimated tax payments. Specifically, I got people like, oh my gosh, how do I figure out, what to pay? All right, so let's go back a little bit and understand who is required to make estimated tax payments. All right, so number one, if you expect to owe $1,000 or more after you put it all together and see what you get, at the end, if you expect to owe $1,000 or more, then you will have estimated tax payments. Or if your withholdings is less than 90% of what your tax liability would be. Now, if you have a C corporation, if your tax liability is going to be $500 or more, then you will have estimated tax payments for your corporation. And it is also possible for you to have estimated tax payments for your corporation as well as estimated tax payments for your personal return. Now, the majority of home business owners are what we call pass-through entities, where the business profit and losses are passed through to your personal return. Pass-through entities are everything but the C Corp. So your sole proprietorship, your single member LLCs, your partnerships, your multi-member LLCs, and S Corps, all of those are pass-through entities. And one way or the other, the profit and losses wind up on your personal return. Okay. So, like I said, when you put it all together between you and your spouse, if let's say your spouse has a job and you're running a business, once you put all that together in the wash, when it comes down to the end of it, if you expect to owe $1,000 or more, you're going to have estimated tax payments. Now, most people are like, okay, how do I figure out what I'm going to owe? Okay, so let me say that this is not going to be an exact number. Okay, it never is. I don't care how much you try, it never is. I've never seen anybody get to zero, right? Actually pay the exact amount that they owe and it's just completely zeroed out. I've never seen that. The closest I've ever seen, is $50 to the state. And that person almost had a cow about that. Girl, bye. All right. So in order for you to estimate what your quarterly estimated tax payments are, you're going to need to estimate your adjusted gross income, your taxable income, what your tax liability will be, what your total tax due is. Everybody has that, a total tax due, your tax deductions and your tax credits. You got to know all that stuff in order to, as accurately as possible, estimate your estimated tax payments. Okay. Now, one of the things that the software does when you're using tax software, professional tax software, home use software, is if you are due to make estimated tax payments, they print you out these nice little vouchers that do the work for you. But if you're trying to do the work ahead of time, you need to a form 1040-ES. I'm going to go and share my screen, and so you can see what this looks like. Okay. Okay. Let's see. All right. So I hope that works out. Okay. So this is the 1040-ES. Okay. It is approximately 12 pages. All right. But it comes with the instructions. So it goes through all of the information that you'll need. Just all the various instructions. Okay. And this is, make sure you have the updated one. All right. Because you can tell it'll be 2018. Then you'll have your, notice the increased standard deductions. All right. And so then you get down here to blah, 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 change your name, how to pay, all that stuff. Okay. And et cetera, et cetera. Okay. So then you get down here to do the math. All right. So you have to enter your expected income and profits that are subject to self-employment tax. If you are a home business owner, any profit that you have is subject to self-employment tax. Okay. And so then you have to follow the instructions. Okay. So it gets, okay, you got to do the math. That's what it boils down to. Then you want to make sure then when you're looking at your tax rate schedules that you look under the appropriate filing status. There's the single, there's head of household, and right here, married filing jointly and married filing separately. Okay, so make sure that when you go to this the rate schedule that you look for the appropriate filing status. Okay, and then you do the work. Right? You do the math. Now you will have to have a tax table available to see what your estimated tax liability would be. And then it gives you your payment dates. Now, please notice, y'all hear me, you just heard me at the beginning of this broadcast talk about when the estimated tax payments are due. So here are the dates. The first one is due on tax day, which I'm assuming now is, whatever tax day is in 2019, which I think is April 15th. But for 2018, it was April 17th. So on tax day, you have not only if you have an annual tax liability due, but your Q1 is also due on tax day. So that's potentially 2 and up to 4 checks that you're going to be writing to federal and to your state government if you have estimated tax payments there. And that's Q1. But notice Q2 is 2 months later. All right. So you heard me say all the time that the first 6 months of the year is when you're going to write the most checks to the government. Okay. And then your Q3 is due in September, generally September 15th. The dates change based on if it's a holiday, weekend, blah, blah, blah. All right. And then Q4 is due January 15th of the following year. All right. But if you put this in calendar order, you have a check due in January. Then you got a check, 1 or 2 checks that are due in April. And then you've got another check or 2 due in June. So like I said, that first 6 months of the year, it's a lot of check writing going on. All right. And so this is why I say set aside 30% of your income in order for you to be able to write said checks. And then you have your vouchers. All right. Your 1040 ES payment vouchers. And that's, you put your name, you fill out your information. Okay. You put how much you're paying, your social security number, et cetera, et cetera. Like I said, software generally does this for you. So it's already printed out for you and you can just use it and keep it moving. But the thing about estimated tax payments is that, hold on a second. There we go. The thing about estimated tax payments is that, it is an estimate. So, and especially when we're talking about this filing year 2018, it's going to be kind of funky for everybody. And the reason is that we have this tax reform. Now, I will also caution you. I'm going to pause for effect because I want you to hear me clearly. Okay. 2018 filing is not the time to cheap out on your taxes. And the reason is that with the tax reform, because it has happened so fast, honestly, as a tax professional, we're not sure that the software writers are able to get it all done and get it all right. We don't know. That's the truth. And so, so you have to have someone who understands this math as it relates to home business owners. And especially if you're a home business owner and you have employees, which we have home business owners, small business owners that do have employees. If you don't have somebody that understands how this math is supposed to work and who is able to look at the software and double check it by hand, if you don't have somebody that can do that, I'm going to tell you that you need to go and hire someone who does. This is not the year to, just go off all willy-nilly and trust the software. And, because when it comes down to it, when you do that, you kind of put yourself at a disadvantage. Once we get the kinks out of this tax reform, okay, you know what? Go for what you know. But for this, 2019, for your filing for 2018, I'm going to tell you that you really need to know what you're doing in order to file your taxes. Because believe me, when I tell you, tax professionals and CPAs, we're sitting there going, okay, say that one more time. All right, one more time. Okay, one more time. Like, because it is the math starts to get a little complicated, especially when you're looking at phase outs for, because everybody is hearing about this 20% qualified business income deduction. Okay, that's great. But there are rules that apply. There's also going to be phase outs that apply. There's, and it's an up to 20%. That doesn't necessarily mean you're going to get the full 20%. There's lots of different variables. And so this is why I'm telling you that this is not the year to go cheap on your tax preparation. And it's also, and expect your fees to go up. Like, seriously. Expect your fees to go up, because it's going to take tax professionals a little bit more time to make sure your stuff is right, because we're going to have to double check this stuff by hand. And yeah, we might as well have just taken calculus. It might have been a little bit easier. Okay. So yeah. So when it comes down to estimating your estimated tax payments, get the 1040 ES, review it, and do the math and make your best guess possible. In the meantime, make sure you're setting aside that 30% of your income. If it turns out that you need to set aside more, okay, but even still, you still got this chunk of money to where you can start writing these checks and, and meet your tax obligation. That's what it boils down to, you guys. So yeah, so that's all she wrote, you guys. So listen, thank you guys so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right, have a great day, and I'll see y'all next time. Bye.